Awesome. Awesome. Well, again, welcome. Thank you for everyone who's joining us today. This is another webinar we're putting on in a series of sort of educational and informative webinars we've done around various insurance topics. And this is one we're super excited about. It's very topical to some of the stuff and a lot of the initiatives we're working over here on Jones, but it's COIs versus policies, why verifying policies for exclusionary language matters. And my name is Steve. I'm the VP of Revenue Jones. And I am really the sideshow here, joined by my colleagues who are just absolutely incredible and amazing. We have Jessie Lopes, who is the Director of Risk and Compliance for Jones. So she oversees all of our auditing operations and training for our team and our models and our product and software, and has just been, the driving force behind a lot of the innovation we've had around our auditing ops. And Hisrain, who is our insurance policy analyst, who has been really leading the charge when it comes to our deep dive into going from insurance and endorsement certificates endorsements to full insurance policies and exclusions. These are just wonderful subject matter experts. So thank you both for joining, and I'm excited to walk through this with you today.
Thank you, Steve.
Absolutely, Steve. Thank you. Thank you to everybody that joined as well.
Yes.
All right. So I think Jessie, you might be driving the deck here.
Yeah, absolutely.
All right. So the first thing I just wanted to just tee this up is why policies, we talk about exclusions. I think people have maybe heard this, some may have not, some may have dealt with it more, but what does it all mean? Why even have this?
Yeah, that's a great question. I guess that's the question why we're here, right? I mean, to put it really objectively, I think that a lot of our customers, we're now talking about policy verification a lot. I've been with Jones for over 3 years, almost 4 years. And I can go back to 2021 and remember all the conversations we had with customers. This is not something that was coming up. And now it's becoming a natural conversation, many times initiated by customers, because they are realizing that verifying the COIs alone many times is not sufficient. It's not guaranteed that you have coverage. So naturally, these companies, our customers, are including the policy verification to their risk and insurance programs because they realize, okay, the COI is only providing me with a summary of the coverage. The full policy will review detailed coverage, conditions, potential gaps, limitations that the COI simply does not show. It's not going to be there. Brokers are not going to put all exclusions and other definitions and classifications in the COI. The COI will evidence the dates, the limits, some of the provisions, and that is it. So when you think about that and you put it to the reality and you bring it to a real example, this is the flow that we want to walk you guys through, right? First of all, the COI is provided by a subcontractor, and that COI is reviewed, and there is some back and forth there. But at some point, that COI is going to become compliant. It's going to be accepted. You hire that subcontractor to perform their work. And then because accidents happen, maybe when an accident happens, let's imagine that this subcontractor had an employee that fell off a ladder during the project, and then a claim happens. And when that claim happens, people don't go back to the COI. That's not how claims are settled, right? They go to the policy. So the policy is reviewed, and because the policy is reviewed, a lot of coverage is also revealed with that. And many times, unpleasant surprises come up. And then, imagine that you realize now that that subcontractor had a policy with a height exclusion that says that any work that they are doing or in the building or structure that is proposed to be over 3 feet is not covered by that CGL policy. That means that they had all the limits that you wanted, they had all the language that you wanted, they had a few of the endorsements that you typically request, but none of them mattered because they had an exclusion that is related to the type of work they were performing, and therefore you are left with no coverage at all. So that is why verifying insurance policies matter.
This is a really helpful sort of flow, but I guess my question is how often does this happen, right? Or like, is this something that we see or we've experienced in the past?
That's a great question. I think it is because it's happening more and more often that people are bringing this up to us so much. I remember a year and a half ago, it's when we started to build all of the knowledge, all of the product to support policy review, because we're seeing a lot of opportunity, because a lot of people were talking about these claims that we had a compliant COI, we were doing our job in tracking certificates of insurance, but still that wasn't sufficient to protect us. And I think that significantly improved because of the general contractor customers that we have now. So as we started to work more with GCs, where claims happen all the time, it's when we started to realize, oh, this is a big pain. This is an issue that a lot of people are facing. We have customers that are doing this on their own, and others that don't have the ability to do it on their own. So we do believe that this is a service that the industry right now very much needs.
Yeah. And you mentioned endorsements. And I know a lot of our customers, they'll have endorsements and things like that, but we're maybe for some of the folks that are getting a little bit lost in some of the language here, like what is why is it there are some endorsements that are helpful and some endorsements that are not?
That is a great question. Well, I think that first of all, I think there are two answers to that question. First of all, there are endorsements that are typically part of the COI review. It's been for a while. People are used to having to provide those. And I would say those are, additional short endorsements, ongoing completed operations, waiver subrogation endorsements, primary and non-contributory endorsements. Those are very classic, even notice of cancellation endorsements as well, although less important. But all of these endorsements are very common to have in requirements, in contracts, and people are used to having to provide those attached to a COI. So if you ask that of a subcontractor, they're typically easily going to provide you with that. However, if you ask for a designated work endorsement or a limitation endorsement, they're not going to know what that is, because that's not typical practice in the industry to provide with a COI. That's the first answer. But again, endorsements are part of the policy. If you have an endorsement attached to a COI, you have a piece of the policy, right? So it's not like they are less important than the other policy forms. It's just that they are, or more important, it's just that they are typically provided. And the second reason why they're typically provided with a COI is also because they are adding coverage to the policy. When you have a primary and a contributory endorsement, an additional shared endorsement, waiver subrogation, you're making that policy broader, stronger in coverage. You're adding more coverage that protects the additional insureds. However, they are not going to provide you with an endorsement that is excluding coverage. The COI is not going to state that either, right? The COI state waiver subrogation applies. It doesn't state hide exclusion applies, right? That it doesn't say what the policy doesn't cover. So I think that is also the difference between the policy forms that we are reviewing when we have access to the full policy and the endorsements that are typically provided with the COI.
So with that, why don't we get into maybe some examples, like real world examples that we've seen where this comes into effect? Because I do think, like policy, we use terms like COI and policy, but like there's a lot that gets wrapped up in that. And so maybe you can kind of help us kind of break this down a little bit more.
Yeah, absolutely. We have here a few examples of records in Jones. Those subcontractors were added to the Jones system, and they were audited against a set of requirements that was for COI tracking, right? And with COI tracking, I do mean some common endorsements, as we were talking about. And then at some point, we got to review their full policy. And that's when we realized, oh, here's a big deal. We have a compliant COI, but we have a very poor policy. We have a really problematic policy. And a good example, the names are not real. We, of course, changed the names a little bit to protect the privacy of our subcontractors in the system, but they are real examples. So we have this one, Acme Construction. They had requirements. I'm going to focus on CGL here. They had requirements for 1 in 2 million CGL and primary waiver subrogation and additional insured endorsement. So those are all pieces of the policy, right? But not the full policy. And they got compliant with that. So let me actually show you what that COI looked like really quickly, for the benefit of understanding what typically we see when we are doing COI review, right? So this is a good example. We have a COI here. They had CGL, they have auto liability umbrella, workers' comp, all the limits were perfect. The dates were good. We had the language that was necessary in the certificate of insurance. We had the additional insured endorsement covering both ongoing and completed ops. We had primary, we had waiver subrogation. Perfect. So they were compliant. And this is a subcontractor for one of our general contracting company customers, right? This specifically is for a home building general contracting company that we have as a customer. They got approved. They were most likely hired because the COI was approved. Now, once this GC company started to do policy review with us, we noticed that they actually had a problematic gap in the policy. So here's what happened. Let me share my presentation with you again. So when we reviewed the policy, we found a residential exclusion. And in Jones, when we're reviewing policies, because policies are much longer, like you saw, it was a 4-page document that I just shared with you, the COI and the endorsements attached. The policy can be much longer, many times over, hundreds of pages. In this case, they had this exclusion, this residential exclusion, which was evidenced on page 63. So our customers who are reviewing policies in Jones can click on this button right here, this document button, and it's going to give them the option to view the policy, to actually go to the policy and see what that exclusion looks like. And looking at this list of policies here, they're going to pull up the relevant one. In this case, we're talking about general liability. And then we pull up the policy, and here's what we ended up finding.
Jesse, you might have to just reshare your window.
Yeah. Okay. Sorry. Let me see. Here, can you see the policy?
I see a.
Yeah, it's a
Yes.
document.
Okay.
So let's go to the page that was mentioned. It was 63, I think, right? So here's what we found. We found a residential construction limitation, and that was flagged in the system. Now, nobody better than his friend here to explain to the audience why that is a problem and how that could affect coverage to the customer.
Sure. Absolutely, Jesse. So let's go part by part. The first part here, A, is saying that the following is added to paragraph 2 exclusions. That is referring to the base coverage form of the policy. It's usually the CG001. That's usually what our customers want to see if they're looking for occurrence form. And they include exclusions, and usually those exclusions are acceptable. But in this case, there's an exclusion that's being added to that list of exclusions to the policy. And in here, he's saying that this insurance does not apply to bodily injury, property damage, personal advertising injury arising of your product, if it's a vendor, or your work, if it's a contractor, or anything like this, performed by the insured, the policyholder, or anyone, a subcontractor they might hire, a subcontractor, and so on. And here, the policy is not applying to any work on a townhome, residential cooperative, or residential condominium project, residential housing project, a lot of different residential projects. And if you go to the title, you see that's not an outright exclusion. It's not saying that it's an exclusion. It's saying that it's a residential construction limitation, because they can work with that residential project, but not if the total number of individual residential units is greater than 25. So we see here that coverage is being excluded for this specific situation, and we give the information to our customers so they have control on whether they can work with this customer or with the subcontractor if they work in projects with individual residential units that's not greater than 25. But if it's over 25, then they are not fit to work because they have no coverage, even though they have all the limits, all the additional insureds, all the relevant endorsements.
Yeah, I feel like this is it's really clear that they might have everything, but even the endorsement itself says this insurance does not apply to. So automatically, no coverage at all is provided if the subcontractor was working in one of these residential projects that the number of units was greater than 25. So our customer, especially being a home building company, needs to know that, right? They need to be aware that that exclusion exists because their compliance COI is worth nothing if they're involved in a project like this.
This is, I mean, this is great. And even just kind of going through this, you can see, you can just see how far deep and how far we've gotten away from a certificate of insurance to being able to get to this level of granularity. So I'm sure that the client appreciates, and I would imagine to some degree too, like, there may be even cases where, we'll kind of review these types of documents with them to provide a little bit of like, education or grounding and like, hey, this is what we're looking for and this is how you should interpret it.
Absolutely. Yeah. Especially when a customer adopts the policy review process, we are in close communication, especially in the beginning of the process. So they understand how we're flagging these gaps, when they should feel like, this is a gap that can be waived, or this is a gap that I need to actually have them fixed. They need to amend the policy to work with me. So we do have this close communication with the customer to make sure that they understand what they're looking at and how that can create problems for their projects. Yeah, and we do have another example here. Let me go back to the presentation with the another COI. This is an installation company and contracting, also a subcontractor involved in a high-risk project for another of our GC customers, and they had a compliance COI as well. GL, auto, workers' comp, certificate holder, additional insurance, all perfect. And then when we decided to review their policy, we were surprised with a couple of gaps actually in the general liability policy. They had a height restriction and they had a EIFS or EIFS, however you pronounce it, exclusion, which are, big deal exclusions for this type of company, right? So I'm also going to be sharing my screen with the COI. I want to show you the COI and how it was, perfectly presented, perfectly provided, and then how the policy, however, had those scary exclusions as well. So sharing the COI with you. They had an auto separate certificate for automobile liability that was perfect, good limits, good, all types of auto coverage. General liability also, very solid with the limits, with umbrella. Workers' comp is also provided. Everything is here. We have the AI endorsements for ongoing completed ops. We have the waiver subrogation endorsement and primary. Amazing. So this is very standard, right? Really typical requirements for certificates of insurance. Now, when we looked at the policy, however, if we go to page, as it said on the gap, if the customer goes to page 73, we're going to find an exclusion here. Hisrain, tell us about this exclusion.
Yeah, sure. So this sometimes appear in policies where they are excluding specific operations. It could also be specific work or something similar. And in this case, we saw that they had a specific designated ongoing operation that is being excluded. And when we went in to see, we saw that in the schedule box, they are describing any exterior work on any building or structure which requires work in excess of 30 feet from exterior grade, and something similar like this. They also had a specified location box that if it was filled, it would only be applicable to that specific location. But of course, if it's not filled, it says that this applies regardless of the location. So any work that's related to this level of height is going to be excluded from coverage.
Yeah, and page 75, right, is where we find the other exclusion, which is the exterior installation and finished systems exclusion. Can you explain us about this endorsement exclusion endorsement, and
sure.
also
Yeah.
why that is a problem for this subcontractor.
Yeah. If you are at all familiar with policies, you know that this is a very common a common exclusion that might not apply, but for this specific subcontractor, because they work with insulation, this might really apply, and you would need this endorsement should be removed from coverage for the additional insureds, relevant ones. So in this one, they're also adding an exclusion saying that the insurance does not apply to bodily injury or property damage, etc., if the work is directly related to the exterior insulation finish system. Could be design, manufacture, construction, etc., or if you're working with any exterior component that is used in a structure where exterior insulation and finish system, EIFS, exists. So it's not only if you're working directly, like working with the exterior insulation and finish system or anything substantially similar, but if you're also doing work on a structure that has it, that's also a problem. So because this applies to, it might apply to the job because of the work the subcontractor does. This is something to be aware of.
Super helpful. I mean, I can't imagine, like you said, so, you say these things are common. I think we're going to get to that in a little bit of a later section, but just the fact that these things are so, pervasive, and, a lot of folks that we're talking to just really are unaware because it's not presented in any of the insurance documents is pretty enlightening. I think you had even one more example that kind of highlighted another series of exclusions.
Yeah, we have another one. And this one, I don't think I need to go through the certificate of insurance. But again, it was a compliance COI. The thing here is that we found, in this case, we were reviewing both CGL and umbrella policies, and we found a couple of gaps in the CGL policy and another gap in the excess policy. So in general liability, they had a designated work exclusion on page 78, and they had a designated location exclusion on pages 72 and 73. In excess liability policy, they had a height restriction as well. So I'm going to have His Reign do the same and explain to us about the exclusions on the CGL policy and then on the excess policy. Let's go to the CGL policy. Again, we can just go straight to the page that was mentioning the gaps. We have a problem in the work specific designated work exclusion. Page 78, His Reign, can you explain to us about this one a little bit?
Yes, of course. So this one here, we have an exclusion for designated foreign product. This is also something that might appear with certain frequency in GL policies, but that's something that you need to know if it is there so you can make the decision. And just to point out, like any these exclusions are for work performed by the policyholder or the person working on behalf of the policyholder. So a subcontractor, even if they're not doing their work themselves, if they're another person is doing work on their behalf, coverage is also excluded. And in this case here, they are excluding coverage for work involving wallboard, drywall, plasterboard, or ceiling material manufactured in China, and it does not apply for the bodily injury and property damage included in the product's completed operations and arising out of your work in this schedule. And just to point out that this could be with anything, like this schedule could say anything, and in this case it's saying this, which is troublesome, but it could also be something else.
Yeah. So I think that important to mention, this company is called Vihi Interiors, right? It's an interior company, although this name is fictional, we know that it's an interior company. And this, is also a problem here because they might as well be working with this type of material coming from China. Like there is no guarantee that they are not working with a product coming from China. So our customer needs to know that. Imagine that they are responsible for, the drywall and disputing. So if something happens that comes out of their work, no coverage is provided at all. So it doesn't matter if they have gray limits and everything else that you ask on the COI level, because they have this very significant exclusion when you look at what is the scope of work, right? Now, if we go to page 72, we can also find a California state operations and work exclusion. And I think 73 as well, we have a Colorado state operations and work exclusion. What does that mean? He's right.
Yeah, and this one is actually a little bit more straightforward. It's saying that insurance does not apply to any claim, suit, or demand that arises from the bodily injury, property damage, or even personal advertising injury from any operations or work performed in the state of California or in the state of Colorado, and that again is including subcontractors engaged by the insured. So not only work performed by the insured in those states, or any work performed for you in those states if their subcontractors are also doing the work.
And Israel, I know, for instance, one of our clients, they have a project or a building that's on the border of like Florida and Alabama. So they have situations where, you're hiring a contractor and whose, operations is in Florida, ask them to do work in Alabama and like something like this, right? That's an example. Maybe you're working on the border. And I know there's similar things for, New York City with like the boroughs. Many of contractors who are based in New Jersey doing work in New York. So I think, maybe there's I'm sure you've seen some of those types of examples in some of the other regions that might be a little bit more, more problematic for some other customers, right?
No, yes. There are many exclusions for locations. Sometimes it's just a single neighborhood, like it doesn't work for Bronx or like the whole five neighborhoods of the boroughs of New York. It can be anything, like a specific location. They can have a schedule box where they can list any location, and if you're not careful enough to review those, coverage might not apply even if everything else is correct, even if they'll have any other exclusions, just because your location is not covered.
Yeah. It's kind of wild.
Yeah, and I would say that we have a lot of customers that have like global folders, as they call it, or national folders where, vendors are performing work in multiple states. So you want to make sure that you're not sending this guy to work in California or Colorado because, if something happens, you don't have any coverage at all. So that was flagged. And we also flagged a gap on the excess policy. They had this exclusion here. This is the excess policy. It says designated work. But then when we look at the description box, it's stating something about the high restriction as well. So explain to us how that works.
Sorry. Yeah. Yes. So this one also is one with a schedule box where they have designated work exclusion. And then when you go into it, that interior work over 30 feet above the floor is being excluded, but also exterior work above ground level. So it doesn't even need to be like a very like a very high place. If it's above ground level, any exterior work is going to be excluded by this endorsement here. And again, it's for all locations. It doesn't matter where you are. If this any height work is applicable, is happening, this is applicable. Yeah.
Yeah. So even if it's interior work, if it's over 30 feet, that this policy doesn't apply, which is huge, and most likely would be the case many times as well. So these were the examples that we want to cover, the real examples. In this case, Steve, do you have any?
Well, and you mentioned something that I think is an important thing, and I'm sure people are seeing this and it might be a little scary, but there's probably, and we'll get into this a little bit, but one way our customers do this is they use almost like policy review as a prequel, right? Which is to say, hey, it's not, we have this, rather than getting to a point where it's like, okay, we're about to hire this vendor to do this job. Oh, and oh my gosh, they have a height restriction and an EIFS exclusion, and the building has EIFS, and it's got the building, the jobs above where the restriction takes place. They're trying to front load that a little more and say, hey, here are several interiors companies we work for, exteriors companies, roofers, things. can we pre-qualify their policies so that we can make sure to know, hey, of the folks we're working with, who could present problem, because maybe like you said, height restriction might not matter if they're working on the first floor, and say, hey, this is a great company we want to work with, but we don't want to use them for this job unless we can, resolve this exclusion, right?
Yeah, absolutely. And I think that kind of like goes to exactly what we would be talking next, which is what we are looking at. What is it that we are reviewing in policies? So we have two ways of addressing the policy review. The first way of addressing it would be the full policy verification, which is, exactly that, Steve. We're reviewing everything. We're just telling you, hey, they have this maybe 10 exclusions. It doesn't mean that for every project, these 10 exclusions are going to be problematic. As you just mentioned, like maybe they have this 30 feet limitation, height restriction, but they are working in a ground level. It's not a problem in this case. Maybe in the next project, it will be, because it's not going to be a ground level type of property, right? So we're just giving you everything that we are finding in the policy to be problematic. Any exclusions, provisions, clauses, even definitions, because that's also interesting. Like sometimes they will change the definition of a name in the policy to limit and restrict coverage. Like insured name definition is now not, what you typically would think it is. So we reviewed the whole thing. And if it limits coverage for the additional insureds, we're going to be flagging that as a gap. Now, the customer in this scenario has a lot of, first of all, they need to review everything that we flagged, right? To decide, let me look at the scope of work. Let me look at the agreement that I have in place. These policies, these exclusions, these flags that the Jones team found, are they problematic or not? Many times it's not going to be like, as his Rain said, if EIFS, right? EIFS is a very common exclusion. However, many times it doesn't propose any problem, like contractual liability railroad is typically excluded, but is this project in 50 feet of the railroad? Typically not. So a lot of these exclusions are going to be like, oh, that's okay, we can work with them. But then, you're going to find a few that could be problematic in a few projects. So what our customers have the ability to do is to override the exclusions that we flagged that are not really problematic, that do not actually present any material risk to the project, to the job scope. So this is a screenshot that we were looking at from the platform. So when you see this override button, they have the opportunity to like, okay, I don't mind that they have this excess liability height restriction. It doesn't apply in this specific project. Now, another way of addressing policy verification is a partial policy verification, which we're going to be talking about as well. But when we're doing this full policy verification, we're really looking at everything. It's a very huge list of items that we are reviewing. Over 30 items we're reviewing for sure. A lot of these things are adding coverage that, the CG 0001 form, which is typically the form that people use as a base for the CGL policy, is really limited and needs more coverage. Like we're talking about per project endorsements, additional insured endorsements, waivers, subrogation. So a few of these endorsements that we are looking for are additions to the policy that is typically leaner. But a lot of these are actually endorsements that are going to remove coverage and turn that policy even, more problematic than if it was just the base form. So we're reviewing the full thing. Now, as I said, customers may do the full policy verification process, but they can also do a partial policy verification. The partial policy verification is a more strategic way of doing policy verification. We're doing the whole thing where we're collecting the full policies and everything. However, customers are going to pick up to 5 items, 5 exclusions or 5 endorsements they want us to review, so we can focus on only flagging those things as gaps if we find them. So very common ones, I think that for the customers that adopt partial policy verification, the vast majority will stay with the 5 ones that we are showing here: explosion, collapse, and underground hazard, New York labor law exclusion, or actually not only New York labor law, it's how commonly we call it, but it's like labor law, right? If there is labor law exclusions, height and gravity exclusions, designated work operations location exclusions in the New York 5 borough exclusions, especially for the New York customers. We see this as a big deal. So commonly, customers can pick any 5 items they are more concerned about, but these are very common ones for partial policy review.
So that's super helpful. So giving people a couple different options to sort of choose from. And maybe as a quick commentary, some folks know this, but we do what we call auditing standards reviews with all of our clients, and it's kind of like a risk assessment and reviewing the requirements. And I think through that is probably where you guys have helped to help clients to diagnose, like, well, what's the right way for them to approach this? What's a good way for them to approach this that helps them get to the right level of risk mitigation?
Yeah, 100%. Like, if we're talking about like a home building company, of course, residential exclusion is going to be on that list, right? So it's a conversation that we have. Like, if you don't want to review the whole thing, you want to review a few items. What is it that really is important to you, so you don't end up being exposed even after doing policy verification? Yeah, and now I think we
Real
have
quick,
a little bit more.
we have a bunch of questions coming in, but
Okay.
we have a super fan on, and he's asking about action over exclusions, and I know that is a kind of a New York centric issue that's really, really topical. But I didn't see on the list of policies action over, right? So what is that? Maybe you could go back to that long list and understand, like, well, what is a policy exclusion for action over, and what does that mean? We did a whole webinar on this, by the way, which you can share with everybody.
Yeah, absolutely. We do have you here. Labor law, third party action over exclusion, injury to employee. They have multiple names. Rain, I think that's a great question for you.
Yeah, sure. So the policy usually, so we have a specific exclusion in the normal CG 001, which is the base form that everybody wants. It's the occurrence form, and it says that injury to any workers are being excluded by this policy, but they have a specific addition to that, an exception that if it's from liability assumed under an insured contract, then it is covered, and that's what we want, right? But because in New York specifically, the employers can go over the people that hire them. They can and go after the general contractor or the owner if they're if they can sue them even if they already got their workers' compensation settlements or anything like this. But if they go over the policy of the subcontractor can cover it because they assume the liability under an insured contract. So this is what we want. But sometimes they have an extra endorsement replacing this exclusion to remove that exception. So any injury to employee will be excluded from the policy. So the subcontractor, even if they signed an agreement assuming the liability, signed the contract assuming the liability for the injury to the employee, their policy is not going to cover, and then the employee can go after the general contractor or the owner, so to get what they want, like in a claim or something like this. So.
And there is, the labor law is a New York centric thing, and there's a lot of very litigious, but we are seeing in other states, interestingly enough, similar claims being tried. There's no labor law in say Texas, but we're seeing these like employer this contractual liability kind of things popping up a bit more in other states, so which is just interesting to see. All right, sorry, continue. That was just a little quick aside.
Yeah, no, I ended up, it was an interesting segue. I ended up pulling up the webinar chat, and I see the conversation here. People were asking about how common height exclusion is. I would say that height exclusion, like a full and absolute height exclusion, is not that common, but limitation, I would say that it is pretty common. Wouldn't you agree, Rain?
Yes, and it's very common to have like very low height being restricted, like over 3 feet. We showed some examples with like 30 feet, but we see a lot of 5 feet as 3 feet, or they're measuring stories as well, like 3 stories. And that is not like, oh, we're not going to find it in every policy, but it's something that we commonly find sometimes.
Yeah. I think we ended up answering a few of the questions about action over. We have questions about Jamie and Amy are asking about other exclusions typically related to substance like silica and PFC and PFAs. I think that overall, the scope of what you guys want us to review, what a customer wants us to review, can be, as we explained, can be adjusted, right? If you want us to check for specific things in a policy. And of course, we're focusing here more in CGL and umbrella, but when we're looking at a auto policy, the focus is going to be pretty different, and even the items that we're checking are going to be very different as well. But I would say that these things are not commonly requested by customers that we currently have, right? There are very common exclusions that pop up in every single policy, and I his Israel could also like mention many other
yeah, like
endorsements that you
or errors and omissions, they need to acquire a separate policy, because those are usually almost always excluded in general liability policies.
Yeah. So we do a lot of this exclusions are typically part of like asbestos, as he said. So yeah, it could be for some of the substances that you don't want to find in an exclusion for because your project will have it. And we had customers talking about asbestos. Like typically it's not a problem for all of our companies that are reviewing policies right now. But recently one of our customers said, hey, I have this as a problem in my property, so I need this to be flagged in the policy if we find it. So yeah, that's definitely things that we can review, but I would say that more often than not, they're not actually part of the review process per our customers' requests. But yeah, let's keep this going. We have some data here, some language that we want to share with you guys, because of course we're talking about finding these exclusions, but what are we finding more and more commonly in verbiage in the policies that we need to be aware of, especially because sometimes they will lurk in a small sentence here and there and change the entire coverage and make it a exclusion that would be seen as a common thing. Like if, for instance, we have an example, common exclusion, pretty much always there, and now it's not really common, it's actually an absolute exclusion. You're actually open to more risk. Let's talk about those. Hisrain, walk us through these examples that you've put together here.
Yes, of course. So this is so what Jesse said. Sometimes if you know something about a policy of general liability, you're gonna see an exterior insulation finish systems exclusion a lot, as I mentioned. And you might just say, oh, there's an EIFS exclusion. Nobody works with EIFS here, so I will just move on and not care about this. But we are seeing more and more absolute exterior and insulation finish systems exclusion. And what is the difference here? So in the normal one, the ISO one, we have an exclusion, as I mentioned, saying that your product or work with respect to any exterior component, fixture, or feature is excluded if any if any exterior insulation and finish system is used on that part of the structure containing the component you used. And so this is the original one. And in the absolute one, it changes a little bit. So they're almost like the first part and the number one here is essentially the same. But on number two, they're saying that any work or operations with respect to an exterior component, fixture, feature of any structure, if EIFS is used on any part of that structure. So you don't need to be, the subcontractor doesn't need to be working directly in the part of the structure that has EIFS. If EIFS is anywhere on that structure, then coverage is not applicable. It doesn't apply to that work. So even if the subcontractor is really not working directly with this thing that's being excluded, coverage might not apply anyway, just because it exists in the structure. So that's an absolute exterior insulation finish system that might go unnoticed, and we are seeing more and more.
Yeah, very interesting. Let's look at another one. Hard hammer clause.
So as you see, we have most of the exclusions, they say it applies to the insured or anyone working on behalf of the insured. And that means that the subcontractors they work with, their subcontractors, the independent contractors. And in that case, sometimes there's a warranty endorsement asking the subcontractor to comply with a series of insurance requirements, similar to the ones that you're going to ask to the general contract or to the subcontractor yourselves. So the carrier, the insurance company asks for a COI with specific limits and specific endorsements. And if that subcontractor is not compliant, work is not going to the work is not going to be covered by the policy. And because the general contractor doesn't have a contract with that subcontractor and cannot, they don't even know the requirements of the carrier, right? So you have no control on whether those subcontractors are compliant or not with against a set of requirements that you don't have access to if you're not looking for the in the policy. So because of that, coverage might not apply because you're not in control on whether that subcontractor is compliant with those requirements. And sometimes there's going to be a higher deductible for the policyholder, but more often than not, we are seeing here that coverage does not apply if the work related to the work of the subcontractor or independent contractor. So it's not a higher deductible for the policyholder, but exclusion of coverage, of full exclusion of coverage if they're not compliant. So it's essentially an exclusion for subcontractor work. They might be covered, but
So
they might not, and you don't have control of it.
So Israel, an example here would be, you're a general contractor hiring a sub, and the sub has a second tier sub, right?
Yeah.
That subcontractors are hard to hammer a clause in their policy, which means that if the sub isn't compliant, that subcontractor's policy wouldn't cover like a claim arising out of the work that second tier sub is doing.
Yes.
Okay. I'm the layman in the group here, so I'll take the strays for anyone who's like me on the line, just kind of head spinning a little. But the thing that I've heard that might be anecdotal for folks is like I'm hearing about general contractors like our clients and or maybe even property managers and owners who have these clauses in their policies. And for instance, in New York, you might have a hard hammer clause in your policy, which means that if your subcontractor isn't compliant, this hard hammer clause might apply to you and your coverage. And I've heard horror stories of buildings who've had to eat claims and then they can't even get insurance for the building. Because once they've had one of these like, big nuclear claims, they can't even get someone to underwrite the building, right? So just something to be aware of. You might have one of these types of exclusions or clauses in your own policy as a general contractor or property owner.
Yeah, great points, to you. See, you're rocking it. I think you're thinking less of yourself than you give you're not giving yourself enough credit. Yeah.
Yeah.
Well, let's go to the next one, classification limitation. Yeah.
So this one, when you go into a general liability policy, there's going to be classification of the work performed by the subcontractor. So they usually have a code, and sometimes, let's just say for an example that the classification in the general liability policy of the subcontractor is for like interior painting. And if you're not looking closely to the classification of the subcontractor, and they end up doing more than interior painting, they can do exterior painting as well. And usually if there's a claim related to their work, coverage will apply. but sometimes they have this classification description or classification limitation saying that this insurance applies to your ongoing operations and completed operations only for the specific work as described and scheduled below. And the schedule will have the codes and the description of the work being performed. And any other ongoing operations, your work or activities specifically scheduled are excluded from coverage under this policy. So something to be aware of is like if the subcontractor is not doing the work that is specifically being described in the schedule or of their classification, the coverage is not going to apply. So if they are only the classification is only for interior painting and a claim arises from the work that they end up doing in the exterior part of the building, then this does not apply because it's not part of their classification. It's not always going to be there, and if it's not, if they are not being limited, coverage will apply. But if they're being limited, then there's no coverage. No.
I know, Hazrain, that we're working on sort of some benchmarking for this, and I don't want to put you on the spot, but like these are things you're seeing more frequently. So do you have any kind of like, back of the napkin sense for the rate of occurrence for these types of languages or exclusions that you would call quote unquote problematic? Is it like 30% of the time, 40% of the time, 10, 80?
Like it's becoming more frequent. I think I would say like 20% of the time, specifically for like it's changing. It's like a growing rate, right? But we are seeing
the more we do this, the more that number goes up.
Yeah, yes,
Yeah.
perfectly.
Which I think is important to know, because we've reviewed hundreds of policies at that point. I mean, we review 10,000 insurance packets a week as a company, right? Just for sense of scale. So you can sense of like where we are on the amount of policies. This is like an emerging trend, but to see that number in a relatively small population be, 1 in 5, right, is pretty staggering.
Yeah.
I want to be mindful. We have about 4 minutes left, and I think if you could maybe spend 1 minute, Jesse. I know you want to kind of hit 3 key things that everyone should take away in terms of like how to effectively transfer risk. I can make a quick comment on the indemnity agreements, but then I do want to get to some of these questions.
Yeah. No, I actually, before we talk about the agreements and the correct way of transferring risk, I think we could cover a question that I see here that is completely related to some of the things that we said was, I don't review full policies, just schedule forms. Is it enough, or do I still need to review policies? That is a great question, because first of all, we do consider schedule forms a part of the policy review process. So for instance, our team that reviews COIs and endorsements attached to COIs, they don't typically review, they are not part of the team that reviews the schedule forms. If that's something that the customer wants to do, that's a policy review type of service. And why? Because when you're looking at the schedule forms, you're identifying all of these endorsements that could be problematic, and you kind of like have a sense of where you need to look at. However, the schedule forms could hide a bunch of scary exclusions that you're not going to see the name there in the title, right? Yeah. And Hazrain, I think Hazrain talked about one of those here, right, Hazrain? Let's go back. Maybe you can refresh our memories.
Yeah, sure. I think the one from the umbrella policy.
Oh, yeah. It was this one. He said height restriction, right? But the title was not height restriction.
Yeah, it was designated work. And you would not know if they have a very limited height restriction, because it's any ground work, exterior work above ground level, so any work in that sense. So you would only see in the schedule of forms as designated work exclusion or designated operations exclusion, and you need to go into the policy and into the schedule box of the endorsement to find out that there is a height restriction. Also, there are sometimes extension endorsements or like a general liability package, they might have like
Mhm.
clauses inside them, not specifically schedule boxes, but they just say like, oh, extension endorsement, and they hide a lot of exclusions.
And then it's a
inside
bunch
them.
of exclusions. Yeah.
Yeah.
Well, now
So
let's
let me
close
just
with
just to
the.
recap that. So the schedule
Mhm.
forms, and I've seen customers do this. You know, it's like an early warning sign. Like sometimes you'll see an exclusion right there, but sometimes it won't, right? So, you know, what I do see some customers who want to say, hey, we'll just collect the schedule of forms because and then if we see something that that might indicate an exclusion, we'll ask for the full policy. So that's one way they do it to maybe be a little less invasive, but still sort of help with the process. I
Yeah.
just want to be mindful. We have a minute here, not to shortchange everybody, but well, maybe you give this quick framework and then we can kind of try to wrap up. We may need 1 or 2
Yeah.
extra minutes.
Absolutely. I just wanted to kind of like talk about this really quickly because we're talking about policies and why reviewing policies is important. But we do need to think about the process of transferring risk, right? The first thing that you do is identify in my projects, where do I have exposure? Where do I have liability? And then when you assess the risk, you have to. I see a lot of customers not doing that. It doesn't matter if you're reviewing policies and COIs if you're not doing the second step here, which is creating a written contract with hold harmless agreement and indemnification statements and insurance provisions. You have to have a master service agreement type of contract with these things there, right? To make sure that you have in writing the statement that they agree with that and they are going to comply with that. Because a lot of the language in COIs and policies, it is important to vet the COIs, to vet the policies, but a lot of the language there goes back to the contract, goes back to what they agreed on in the contract. So if the contract doesn't exist, it opens people to liability. So there are different levels of effort to manage risk. We know that COIs are easy. People are used to providing COIs. They're handing out COIs. Here's a COI. You have a COI. They're giving COIs to everybody, right? Now, it's important that you understand that having that certificate of insurance with the language that you wanted, with the names of the additional insureds, does not actually protect you as you think if you don't have a written agreement, right? So these two are the very basic two things that you need to do. And then if you really want to make sure that you don't have high projects that are open to huge liabilities, as Steve also mentioned, one good example, you need to think about policy review, looking for those exclusions, looking for things that are completely saying this insurance does not apply to you, right? And identifying those so you're not open to huge financial burden and huge claims. So Jones can help you with all of those things. That's, what we do. We review COIs. We have a great process for reading agreements, for managing agreements within the system. And you can automate that, have them sign it in Jones, making sure that you have agreements with everyone that you work with. And also, of course, policy verification, as we talked about a lot here today. And that is it. That's just, a final tip that I wanted to give about transferring risk.
Yeah, thank you, Jesse. And thank you, everybody. I know we're a little bit over, obviously a ton of content here. And, if anything, what I sort of take away from these conversations is this is tough. It's really complicated. And if I know, there's a few dozen people on this call, right? And everyone's probably a risk manager, a project manager, a property manager, administrator, somebody who's being tasked with this responsibility. And there's just usually not enough time, money, and energy to do it. So, right. So we can help our customers sort of highlight this exposure. It gives them an opportunity to just focus on how do they manage that risk rather than going through the whole process around discovering it. But I'm already going to call it our next webinar topic is, now that we've scared everybody by showing them how we expose all these exclusions, we're going to focus on how we're going to help them, resolve them. And I think that's what we need to tee up. But we also have our upcoming webinar in the interim, mastering tenant insurance compliance with Friedman Real Estate. And we'll have some of our amazing clients, Violet and Trisha from Friedman Real Estate, a big property manager out on the West Coast. And looking forward to digging out with that. And thank you all again for your time. And please, lob in any other questions, and we'll be sure to get those answers distributed to everybody who attended, as well as a copy of the presentation. Thank you all. Thank you, Jesse. Thank you, Israel.
Thank you.
Really appreciate it.
Bye.
Take care, everyone.